Hello and welcome back to The Note, still coming to you from Tokyo. Now, Japan has been disappointing investors for a quarter of a century. It appears to be one big value trap. As stocks have fallen again, people have been saying, here we go again. But could this sell-off be overdone? Is there really some value this time? I spoke to CLSA's Chief Japan Strategist, Nicholas Smith. Now, if we start by taking a look at this chart which you produced on how different markets are correlated with the Chinese renminbi, it's fascinating to see how correlated some markets such as the FTSE are, and also that Japan, despite its proximity, appears to have almost no sensitivity to China. What's going on here? Does this imply that Japan shouldn't really be caught up in the Chinese fears?
I think there's some sense in that. I think the markets that are highly correlated with China tend to be those that are involved a lot in commodities, and Japan absolutely isn't. You can't list a Japanese oil company, for example. But on the other side, when I've looked into profits, of course, when China was white hot in 2009, of course, Japan was suffering badly, and as China has slowed, actually Japanese profits have moved to an all-time high, and it's surprising. But Japan is much more related to North America and Europe than it is to China.
Okay, now Japan has a reputation which I think it broadly deserves internationally as being something of a value trap. It keeps looking as though it offers value and it keeps ultimately disappointing. You produced this very interesting chart that shows that when it comes to choosing stocks within Japan, value really works remarkably well over time. Why do you think that is? And what stocks look as though they offer value now?
I think the trouble with Japan is it's a highly cyclical market.
Right.
And so when earnings are hot, you tend to overestimate how far they're going to go. And on the downside, you just don't know what's going to happen. And the way of getting past that kind of euphoria in the reverse is to concentrate on price to book.
Right.
And so if you can just hold your confidence and buy when they're beaten up on price to book, then it's worked probably more reliably as a value market than anywhere else in the world.
Which leads us obviously to the next question. Plenty of stocks do look very attractive on price to book now. Which sectors, where of those bombed out sectors would you be most interested? Mining, for example, you've still got to worry about whether it's ready to turn, I would assume. Where do you see the most appealing value?
So what I've done is I've looked at what percentage of their history of different sectors traded cheaper than they are at the moment on price to book. And it's not surprising that the cyclical sectors are very, very badly beaten up at the moment. So you get areas like shipping and steel companies, for example, and also the banks that have only been cheaper for 1% or 2% of their history. In many, many cases, they've never been cheaper.
So all of that looks interesting. One final question. It looks as though earnings are going to be quite positive, possibly because, as you were saying, there are no oil companies in Japan to drag down the averages. There's also this sense that Japanese companies have a very low payout ratio when it comes to dividends, that there's a lot of cash there. How possible is it to release that value? Are Japanese companies willing to listen to shareholders? Do you get to benefit from the cash that they have at their disposal?
I think they'll have absolutely no alternative. It's a major push of what the government's trying to do at the moment is to improve corporate governance. So Japanese companies have spent the last 20 years trying to repair their balance sheets after a blow-up that made 1929 look like a walk in the park.
Right.
And now they've got huge trauma, and if anything, they're holding too much cash. And their banks are also somewhat overcapitalized. So we're now in a position to say there is actually no good reason why you don't pay. And if you take the cash off your balance sheet, then we have debt capital markets, which we didn't used to help you out. So with the government very much pushing on companies, we're in a very, very good place at the moment.
I have to say, I think that's a fair summary. There's always a risk that the market's momentum can carry it further, but yes, there does appear to be some value here in Japan.